Hey family, today we're going to quickly go over a trade that one of my students had taken and lost today, and I am going to try to make sure I get everything correctly inputted for you guys so that we can all learn from this. So his entry was at 1.68179. Okay, so he took his entry there. And his stop loss was at looks like it was at 1.68756. So above the high, a little tight there, but okay, nothing wrong with that. And then his take profit was at 17879. Take profit. So already what we can see is that his risk to reward ratio was 0.77, or actually a lot less, 0.54. So that's something you definitely want to be mindful of, because it's really not worth you risking more money than you're going to be making. So if you were looking to take this on a 4-hour time frame and your account is small, then obviously you need to lower your stop loss, lower your lot size, or try to take your entry at a better position. So he was using the swing high signal candle strategy. And at the time, he identified this as his swing high. And then his signal candle was this candle to the left. So a couple things. Is this the swing high? If you look left, you would see that this was not the swing high. This actually is the swing high, because it didn't break above, the market didn't break above this high right here. The market is in a range. Anytime you have the market in a range and it doesn't break above this previous high, then you would use this as your swing high. So that's one mistake that I saw that he made. And secondly, he used this candle as the breakout candle. Not a problem there, even though the way he marked the zone up was not correct. So when the market, let's move this market forward. He says that when it broke below, okay, so that I'm sorry, that happened just a little too fast. Let's go ahead and let me drop to a lower time frame so we can actually see how it actually played out, even though he took it on the 4-hour. So he used this as the breakout candle here. Let me just make sure. Drop a line here. And then I'm going to jump to the 1-hour and see what that looks like. Okay. And he was looking for a retest. You draw the line for the retest. He was looking to retest this area to take an entry. So let me go ahead and put this on here for retest. I do not have it saved. So this is where he was looking to retest and then take the market down for a sell. Okay, so if you had a sell limit, of course you would have lost this trade. If you were patient and wanted to confirm that the market was actually selling and you had momentum, you would have dropped to a lower time frame just to confirm that this market is in fact selling down. So this would have been the breakout candle right here. It broke below this, so it's a little different. So it broke above this starting point right here. So let me go ahead and mark this up. This is the starting point that it had broke below. And so right now we're looking for a pullback. Let me get rid of this line. We're looking for a pullback, which is expected. So we get our pullback, right? And right now, what we're expecting, because we have the market drops, pulls back, it drops below. This is the breakout candle. The market pulls up, and from here, you can identify. You do want to identify your starting points in this rally, which at this moment I'll just use the wicks. So I'm going to use the wicks to identify starting points. Otherwise, I could have just dropped down. And what I want to see is that the sellers take control of this pullback by closing below that starting point, retesting, and then take the trade for the sell down. That's what I'm looking for. But because he had his stop loss here in the zone still, he's no longer in the trade. And now the market is coming back down, slowly for surely. And the minute it breaks and closes below this starting point area, you get your retest and take the trade. And I'm pretty sure in this candle right here, on the lower time frame, you would have gotten your retest for the sell. So, as a matter of fact, I'm going to show you what I mean. So, we're waiting for this market to break below. It breaks below. You see this rally, and you're looking for your retest. And to see that, you would need to, let's try the 15-minute. Bam. There you go. So break closes below, pull back, enter the trade right here, and then you take it down for the sale to your take profit. And let's see if he had a good take profit area. Looks like this market is still playing out. It hits his take profit. So, as we can see, the importance of waiting to confirm the market that the sellers are in control versus setting sell limits and just hopping into the market when it gets back into the zone. Like, your zone has to be marked correctly for one, and you also have to confirm that the sellers are in control, or you're going to continue to have this happen. So lessons learned from this setup, you want to identify your swing high. Okay, let me remove all of this. You truly want to identify your swing high. And secondly, which is now this candle, but matter of fact, before this happened, this was the make sure I'm in the right time frame. This is what he was looking at. So this was the swing high before all of that happened. This would have been the signal candle right here, the candle to the left. he would have been waiting for the market to break and close below this zone, which kind of, it actually matches up with the candle he used, excuse me. However, because he didn't use the correct swing high, his stop loss was tight and it wasn't above the zone. And the pippage for this is quite a bit. It's quite a bit. So this is why you want to confirm. So before you even get in this trade and set your stop loss. So broke close below, had this buy momentum, and then you confirm on the lower time frame that the sellers are in control, and then you go ahead and take it down to whatever the take profit was. Now in this case, I would have been looking for other areas of starting points to use as an advantage for my take profit. And what I would have been looking for is a short here. Definitely want a better ratio. There's a gap right here where the market broke out. Let me confirm. Hold on. See, with this, you definitely, because this market is trending up and you only want to take 20 pips, you will need a really good entry. I wouldn't even be looking to take this market down this low. So yeah. So it's unfortunate, and things happen, but the entry should have been up here in this wick, and he could have took it back down to this zone. So there we go. Sorry about that, guys. It's a little late tonight. So his entry would have been in this wick once he confirmed that the sellers were in control. And I'm going to show you on a lower time frame once again what they may look like. Okay. Buyer, buyer, buyer. Pull back. 100% retracement, right shoulder for head and shoulders pattern. It even closed and broke below the starting point right there. You could have got your retest right here and took it down. Your stop loss 5 pips above the high on this time frame that you took your entry, and your take profit could have been here. This is a better risk to reward ratio. So this is how you want to take your entries. So thank you for joining me today. I hope this helped you out. Anyone else who may be struggling with their trades, thank you so much. Take care.